Hi and welcome. I hope you're having a fantastic day as we're going to talk about BAKKT and Bitcoin. Stand by for liftoff. This is a deep dive into the BAKKT exchange. And really, when I say stand by for liftoff, I'm talking about tomorrow, September 23rd, BAKKT goes live. So, disclaimer, I'm not a financial advisor. This is not financial advice. This is my opinion. I'm not smarter than you. You are smarter than you realize. Do not trust what I say. Do your own research. So, will the BAKKT launch help Bitcoin go mainstream? Let's take a look at this. So, product designed to remain Bitcoin as a mainstream investment for the world's investment managers will go live. When ICE Futures US, one of the world's largest commodity markets, opens trading at 8 p.m. Eastern Time, Monday, September 23rd, it will offer BAKKT daily and monthly futures, the physically delivered cryptocurrency contracts ever traded on a federally regulated exchange. So let me break that down really briefly. So first, let's talk about who BAKKT is. The company that owns the New York Stock Exchange, Microsoft, and Starbucks, the three of those companies teamed together and spent $500 million and almost the last 5 years building a cryptocurrency exchange so that people could buy Bitcoin futures contracts and short Bitcoin futures contracts. Now, a futures contract in this particular case is a contract that will be for a single day or it'll be for a single month. And when the contract expires, actual Bitcoin will be delivered to the person holding the contract. And so you'll go out to an exchange, and if Bitcoin is selling, say, for $10,500, then a person will purchase a single Bitcoin contract, and either at the end of the day if they purchased a daily contract, or at the end of a month if they purchased a monthly contract, and they still own it at the end of that day or at the end of that month, they will receive Bitcoin deposited into their account. Now, if the exchange works as planned, it will give institutional investors a secure, well-monitored place to trade Bitcoin, the world's most widely used cryptocurrency. That, in turn, could help alleviate the problems with volatility and trustworthiness that have kept Bitcoin from being more widely adopted, giving the asset a major boost in legitimacy. With the BAKKT futures, endowment funds or brokerage firms that trade the contracts will be able to channel their payments and secure a guarantee that their Bitcoin will be delivered through the same ICE clearinghouse that protects settled contracts traded globally by global oil giants. Their newly purchased tokens will be stored in a super secure warehouse overseen by the same team, deploying the same cybersecurity measures that safeguards their equity trades on the New York Stock Exchange. So if we were to say that in much simpler terms, the group of people that handles all of the security for the New York Stock Exchange and handles the security when you are buying and selling stocks that are traded on the New York Stock Exchange, it's that group of people that will be responsible to make sure that the Bitcoin futures contracts are traded correctly. And so because of that, that gives institutions and people with millions of dollars and even billions of dollars that they want to invest into cryptocurrency, they feel a lot more comfortable in doing so. So, making Bitcoin more popular. The BAKKT brass stressed that their immediate goal is making Bitcoin a popular alternative investment along with gold and private equity. But an efficient, regulated market in the currency could eventually remake the way we pay for everything from coffee to airline tickets. So this reveals to us what the expectation is, and part of the reason why the owner of the New York Stock Exchange teamed up with Microsoft and Starbucks. Starbucks, everybody knows them as the coffee maker, to buy their Starbucks coffee. But Microsoft is also well known for building the software that handles transactions for online businesses that are buying and selling goods. And so They're building software applications that are used to process credit card payments. They're used for processing inventory and managing online products and online stores, and on it goes. I mean, Microsoft not only builds, Windows, but they also create products like Microsoft Word and such. But if you were hiring Microsoft to do a project for your business, they're going to be building all kinds of applications for companies. And so it's that expertise that the BAKKT exchange has gotten when they involved Microsoft and Starbucks. And you can really see, because of that partnership, that the ultimate goal will be to use Bitcoin and cryptocurrency payments to cover everything from coffee to airline tickets. The funds that trade on our exchanges express to us that they don't want to deal in today's unregulated markets and want end-to-end federal oversight, which is what BAKKT is bringing to the table, on the level of the New York Stock Exchange, to feel safe trading in Bitcoin. Now, this says Loeffler, and Loeffler is the president of the BAKKT exchange. She is the wife of the person who's the president of the company that owns the New York Stock Exchange. That company's name is the Intercontinental Exchange. And the interesting thing is that the Intercontinental Exchange is actually a very large company. They do over $9 billion a year in sales. They have approximately $2 billion a year in profits. They own and operate 12 exchanges worldwide, not just the New York Stock Exchange. And they have over 8 different clearinghouses. And clearinghouses are the organizations that handle things like futures contracts and making sure that those contracts are actually cleared. In other words, the person that pays for a bushel of wheat actually gets their bushel of wheat. And that's what they mean by making sure that the contracts are getting cleared. Adds White, pension funds, for example, are diversifying into alternatives. Regulated Bitcoin futures could be a part of their investment mandate, since they have different correlations with both stocks, bonds, and other alternatives such as gold. So, to say this in a simpler way, it's kind of like thinking that when gold or stocks or bonds are going up, Bitcoin or cryptocurrencies may or may not be going up. There's not a direct relationship between cryptocurrencies and stocks, or cryptocurrencies and bonds, or cryptocurrencies and gold or other assets. Bitcoin, the price of Bitcoin seems to be independent of all of these other assets. And because the price of Bitcoin moves independent of these other assets, a lot of major institutions are looking to add it into their portfolios because it gives them, it makes their overall portfolios a lot more consistent in their overall growth. If Bitcoin went down when real estate went down, then the part of their portfolio that's invested in real estate would be at risk every time real estate was going down in price. But Bitcoin doesn't have a correlation like that, and so it's a great hedge against other assets when those assets are dropping in price. This is holding its value or even going up. So we'll move on. Once hedge funds, family offices, and the different brokerage firms like Charles Schwab, TD Ameritrade, etc. So hedge funds are organizations, large companies that have a whole bunch of money that they invest in different businesses or different assets in order to make their investors money. My wife has worked for a couple of different hedge funds, and working for those hedge funds, she saw them purchasing assets. Sometimes those assets, one of them was buying a foreign bank overseas. Another time they were buying restaurants in the United States, like the entire franchise, not just a single store. But they would buy that franchise, work on getting that franchise to be more profitable, and then sell the franchise once it hit certain goals, which made the value of that corporation more valuable, and so they would make a significant profit by going in, making it more profitable, and then selling the company once they had brought up its value, basically. Family offices, the way you can think of that is more like, it's kind of like the Rockefellers. The richest people in the world create family offices to take those fortunes and invest the fortunes so that the family will have income for generations to come, not just the current generation, but they want to make sure that the next generation, the next 5 generations, the next 10 generations are well off because of what was built in today's world. And then these are your typical brokerage firms, Charles Schwab, TD Ameritrade, etc., that retail investors use in order to buy stocks and bonds, and in the future, cryptocurrencies. Now, the gigantic trading volumes in backed contracts should smooth the lurching price swings that scare both investors and would-be users, creating a stable, trusted currency. So, this statement I find very interesting. While I do think that that's what will ultimately happen with Bitcoin, I think in the short term, in other words, over the next coming months, and possibly years. And what I'm about to say, this is my opinion. It's not financial advice. But in my opinion, I think we're going to see a period of very, very rapid growth. I think the growth will exceed what we've seen previously with Bitcoin. And then it will kind of level out. And the reason why I say that is hedge funds, like an example might be Northern Trust, that has over $10 trillion in investments. If they decide to put 1% of $10 trillion into Bitcoin and cryptocurrency, they're going to take 1 billion, that's with a B, and put it into cryptocurrency. And that $1 billion will drive the price up very quickly. It'll actually do 2 very significant things. The initial purchase will drive the price up pretty rapidly. And the second thing that $1 billion investment will do is it's going to take a lot of cryptocurrency off the open market. So right now, Bitcoin is a very, very limited commodity. There's a very limited supply. And when these hedge funds buy large blocks of Bitcoin, they're not like a day trader where they're going to buy it for a few hours and then turn around and sell it. These guys are more long-term investors. They're thinking about a 5-year or a 10-year investment, and they'll buy it and they'll hold on to it for a longer period of time because they're not thinking in terms of just making a quick 5% over today's trading volume. They're thinking more about making 200% or 1,000% or 100,000% on their investment. And they're willing to hold it for 5 years or 10 years in order to get these really, really big returns, because getting those larger percentages takes a longer period of time. And so these guys are, the hedge funds and the family offices are geared towards buying a lot of Bitcoin and other cryptocurrencies and holding on to them, literally taking them out of circulation. And that makes the amount that's left to be bought and sold a smaller commodity. There's less of it to buy and sell, which makes the price go up because of scarcity. So seeing what's happening with the BAKKT exchange is going to cause 2 things to happen. It's going to increase the price because there's more money coming into the market to the tune of billions of dollars, and it's going to increase the scarcity of the limited supply of Bitcoin that's already on the market because there'll be less of it that'll be available to be traded. And then the Charles Schwab, TD Ameritrades, and other brokerage firms are where we'll see a lot more of the day trading type of activity, and we're going to see a few people who will be taking either a short term, say 6 months or 7 month perspective on it, to a few people who will take a much longer term. They kind of come under the I can see the guy's face and I can't think of his name, but he's one of the most famous investors, and his strategy is always to buy and never sell. And so Berkshire Hathaway. Anyway, his name's eluding me at the moment, but his investment strategy is always buy and never sell. And so while there's a few people that'll be handling the different brokerage accounts, like, they have an account on Charles Schwab or TD Ameritrade, there's a smaller group that are actually going to buy and hold long term. And so anyway, bottom line, we're going to see a huge flood of new people purchasing cryptocurrency. We're going from a market of 30 million people to a market better than 500 million people plus. We're adding in quite a number of people that are big whales, big time investors that are thinking in terms of, I'm not buying one Bitcoin. They're thinking of buying $1 billion of Bitcoin and getting themselves into a 1% position to the tune of $1 billion or more, instead of, just a regular Joe Schmo who's thinking, man, if I could just get 10 grand together to buy one Bitcoin, that would be awesome. All right, so world to embrace Bitcoin. The gigantic trading volumes in the backed contracts should smooth the lurching prices that scare both investors and would-be users, creating a stable, trusted cryptocurrency. If and when that happens, it's not hard to imagine that BAKKT will create a Bitcoin app for retail purchases. BAKKT hasn't shared its plans for retail payments publicly, but acknowledges it is a partnership that Starbucks suggests big plans in the future. It's also in talks with other consumer brands looking to use digital currencies for consumer payments. After all, the big fees that credit card companies and banks extract from merchants are ripe for disruption, and Sprecher's a past master at making an array of transactions faster and cheaper. So this comment here about Sprecher being a past master at making an array of transactions faster and cheaper, it's because he's the person, his company, ICE, Intercontinental Exchange, bought the New York Stock Exchange in the early 2000s, and they're the ones that took the New York Stock Exchange from a group of men in a big room yelling and screaming and waving papers at each other into the digital age, to where the New York Stock Exchange became a digital product that people would buy and sell stocks online instead of going through person-to-person brokerage firms. And so he has a history of automating, he automated the New York Stock Exchange, and he's going to bring that experience of automating the New York Stock Exchange into cryptocurrencies and eventually into using Bitcoin for retail purchases. So another important thing under the category of making regulation less scary is U.S. authorities have deemed Bitcoin a commodity, and hence it falls under the jurisdiction of the CFTC rather than the Securities and Exchange Commission, which regulates securities. But the CFTC does not currently grant a license to operate spot commodities markets that trade oil or soybean or currencies, where the physical commodities are bought and sold instantaneously for cash. As its name suggests, the CFTC's domain is commodities futures, derivative contracts, mandating payment, from a refinery to a seller of crude oil for delivery of the fuel at a future date. So here's how we can boil down this complex statement. It's pretty simple, really. What they're saying is that the BAKKT exchange is going to be an easy way for somebody to come in, buy a futures contract that'll expire either within 24, a one-day contract or a one-month contract, and own Bitcoin when the thing expires. And while the CFTC is not one that would regulate, what they mean by an instantaneous exchange is where you open up your TD Ameritrade account and you put out there a bid to buy IBM stock, and within a few seconds or a few minutes, depending on what price you put out there, whether you're going with a market price or some other pricing strategy, you'll own that stock. And the CFTC, instead of exchanging securities, which is what I just described, handles futures contracts. And so those contracts are set to expire at a specific date and time. The daily contracts, the daily contracts are set to expire in the evenings, somewhere around 6 p.m. Eastern Standard Time, and then the monthly contracts will expire at the last day of each month. And so by doing that, they get around some of the requirements of handling a security and set everything up so that it actually comes under the jurisdiction of the CFTC instead of the jurisdiction of the Securities and Exchange Commission. So very, very smart move on the part of the BAKKT exchange. In a CFTC regulated market such as ICE US, ICE US is one of the companies that's owned by the company that owns the New York Stock Exchange. They have several different clearing houses, such as this ICE US clearinghouse. And the clearinghouse is where these future contracts, person A buys the contract and person B delivers the actual goods that the contract represents, whether it's a bushel of wheat or barrels of oil, or diamonds or gold or silver or whatever it was that the contract represented. And in this case, the contract actually represents cryptocurrency. Only broker-dealers and future commission merchants that are members of the exchange are permitted to trade. So, in other words, the only people that will have direct access to the BAKKT exchange are broker-dealers. Think of like a TD Ameritrade or E-Trade or one of the other companies that you and I might have an account on in order to buy and sell stocks with. Those are broker-dealers. And then the other group of people that will have access to the BAKKT exchange, direct access, are futures commission merchants that are members of the exchange are permitted to trade. The trading records and capital reserves of those members are carefully vetted by the exchange, and the vetting is overseen by the CFTC. Those firms are also members of clearing organizations. It's ICE Clear US in the case of ICE Futures US. ICE, again, is the abbreviation for the company that owns the New York Stock Exchange. The Intercontinental Exchange is abbreviated down to ICE. And so the company that owns the New York Stock Exchange, that route payments between buyers and sellers and shield participants against losses. For any contract traded on the exchange, if the buyer fails to pay, the clearinghouse imposes protocols designed to make the seller whole. If a producer purchases an oil or soybean contract and the seller defaults, the clearinghouse arranges to reimburse the buyer. The clearinghouse for futures are also licensed and supervised by the CFTC. BAKKT's coup was creating a futures contract that trades like a spot contract by purchasing daily futures. A buyer gets physical Bitcoin delivered to his or her account the same day, just as on spot exchanges. Now, spot exchange would be like your TD Ameritrade when you were buying IBM stock. Well, the point they're making here is that by them dealing in a daily futures contract, it's almost like an immediate purchase that you would get off of, say, buying stocks off of an online exchange. And so the author here of this article is really complimenting BAKKT for their ingenuity in creating a CFTC product that's not regulated by the SEC that allows people to get close to immediate purchasing power into cryptocurrency. And so that's actually done quite a number of things that are positive for this. The BAKKT monthly futures will establish centralized prices extending 12 months into the future. It is likely that BAKKT will soon face plenty of competition. LedgerX and TD Ameritrade-backed ErisX two prominent crypto trading firms have won recognition as fully regulated, designated contract markets from the CFTC. They plan to launch contracts that will vie with the BAKKT contracts in trading physically delivered Bitcoin. So while BAKKT may have an exclusive thing going on today, it's also clear that in the next months, possibly years, but I'm pretty sure from what I've read in the past that LedgerX and TD Ameritrade is going to have these products live in the near future. BAKKT will have some competition fairly quickly. So custody is the key, and that is a very important part of all of this. The safeguarding of stocks and commodities such as gold from theft is known as custody. Ironclad protection is especially essential for cryptocurrencies. If Bitcoin is sent from the owner's wallet to the wrong digital addresses and the recipient has a private key, he or she keeps the coins, there's no way for the owner to get their money back. Likewise, you'll never get your tokens back from the thief who hacked into your Bitcoin wallet. And so by BAKKT actually custodying the cryptocurrencies that are bought and sold through their futures, it also adds another layer of safeguarding that helps institutions become more comfortable with this asset. ICE does not provide custody either for securities or commodities, but it commands strong fraud detecting tools to protect trades on its exchange and shield payments in and out of its clearinghouse. Now, that's for securities and commodities, but BAKKT will be different. At the BAKKT clearinghouse called BAKKT Trust Company. So the first thing is this is not the BAKKT exchange. It's a different company. A different company entirely was set up in order to handle the custodying of the cryptocurrency that's traded on BAKKT. And the name of that company is the BAKKT Trust Company. So while it is a different company, the name includes the word BAKKT in its title, in the naming of that company. So called the BAKKT Trust Company, ICE is deploying the same cybersecurity systems that buttress the New York Stock Exchange. Unless a client wants to shift tokens from the BAKKT Trust for storage at a rival's site, the transfer of Bitcoin from one customer to another all happens inside its warehouse. If a client sells 100 Bitcoins to fund, if client A sells 100 tokens or 100 Bitcoins to client B, the transactions happens on ICE futures. But BAKKT simply credits client B's account for 100 coins via an entry into the centralized warehouse's ledger and debits credit A's account and channels the cash to A through ICE Clearinghouse US. Now, said in another way, the Bitcoin moves around like stacks of lumber moving from one part of a Home Depot to another part, but never leaves the warehouse. Since all balances are settled on the internal warehouse ledger, the futures transactions avoid running on the blockchain where Bitcoin could be sent to the wrong address. It's like transferring cash from your checking to your savings account all at your own bank. So that's another thing that's going to give a layer of security, is that as these futures contracts are being traded, they actually never leave the custody of the New York Stock Exchange. They're not going to go from cryptocurrency wallet A and into cryptocurrency wallet B. They're actually going to stay the entire time in the cold storage of the BAKKT warehouse. And when client A buys Bitcoin from client B using the futures contracts, then it's just going to be like moving something from one person's savings account to another person's checking account. It'll just be a transfer that is moving numbers from one ledger to another ledger, and that's it. It doesn't actually hit the Bitcoin blockchain. With ICE's help, BAKKT also has installed fortress-like protection for Bitcoin that leaves the warehouse for, say, the owner's wallet. The vast majority of Bitcoin in the BAKKT warehouse is stored in what's known as cold storage. To leave the warehouse, the Bitcoin must move from cold to warm storage. then exit via electronic transfer over the internet. Warm storage is connected to the internet so that the coins can be sent from the BAKKT trust to another exchange or the wallet. Cold storage parks Bitcoin in the deepest of deep vaults, disconnected from the web. Excuse me. Nothing is approved automatically. For Bitcoin to go from cold to warm, multiple people in 2 or more offices at BAKKT or ICE must sign off after applying cybersecurity protocols that protect everything from oil to ETF trading. Then the move from cold to warm requires approval from several additional members of the security team, along with other proprietary processes for authentication of identity. A combined team from ICE and BAKKT are now in place to handle these sign-offs, and their ranks should grow when trading begins. Will money managers embrace Bitcoin? Loeffler says asset managers have told her that Bitcoin could be a boon for balancing their portfolios if it is safe enough. Bitcoin's volatility is a big negative for retail transactions right now, but not for institutional investors, says Loeffler. A lot of commodities that funds use as alternative investments are highly volatile. Oil and coffee prices careen up and down, often wildly. She notes that Bitcoin is the ultimate maverick. Its spikes and valleys are uncorrelated with the trends in stocks, bonds, gold, and real estate. And despite its volatility over the past decade, Bitcoin outperformed those rivals in total gains. In theory, Bitcoin deserves a place in the baskets of alternative assets that are a staple of large, diversified portfolios. So this is a really complex way to say it more simply. The people who have big money want to add Bitcoin to their big money because the sucker's going up really a lot. It goes back to a video I made a while ago about a hedge fund, and the only thing that hedge fund does is buy Bitcoin cryptocurrency. And over the last 8 years, that hedge fund has seen 235% annual compound growth. Now, most companies are happy to find 10% annual compound growth. In fact, over the last 50 years, the New York Stock Exchange averages 8% annual compound growth. And people are always investing in stocks that are sold through the New York Stock Exchange, expecting a return on their investment, and they're happy when they're getting 8%. But with cryptocurrency, over the last 8 years, 235% has been what's possible, what has actually occurred, and is already in the history books. And so it has these people who manage large investment portfolios very excited about being able to get on board and be able to participate in this explosive market. So, who's most likely to bite? Loeffler expects lots of action from retail brokerage firms, in part because millennials and Gen Xers crave holding Bitcoin as an investment. The brokers are always looking for an edge to attract new customers, and offering Bitcoin could have lots of appeal, she says. As for money managers, Loeffler thinks the most likely traders are college endowments and pension funds. They're the ones who are usually in the forefront in adopting new investment ideas. Now, it's quite interesting that she's talking about college endowment funds, because those endowment funds, Yale University over a year ago announced that they had been investing heavily into cryptocurrency. And since then, there's been over 150 other college endowment funds that have announced that they have invested into cryptocurrency. And out of those surveyed, it was 94% of college endowment funds in that survey that came up with a figure of 150 that had actually invested in Bitcoin and cryptocurrencies. And so with college endowment funds getting heavily invested, she's absolutely right. They're showing a great degree of interest, as well as pension funds are also starting to get involved. But with the likes of the BAKKT exchange, it'll make much easier for both or both groups of money managers, both college endowments and pension funds, to start investing directly into Bitcoin. They're the ones who are usually in the forefront in adopting new investment ideas. In the past, adventurous, usually crypto-only hedge funds have been the major institutional investors in digital assets. It's likely that the rise of BAKKT will attract more hedge fund players. For example, just this week, Elwood Asset Management, the firm that manages the personal crypto portfolio of billionaire fund manager Alan Howard, a BAKKT shareholder, announced that it's looking to create $1 billion in portfolios for institutional investors by placing money with a variety of digital hedge funds. What about Bitcoin's ETFs or mutual funds from, say, Vanguard or Merrill Lynch? They're unlikely to arrive anytime soon, since funds holding Bitcoins are securities, not commodities. They would be regulated by the SEC, and that agency has repeatedly told applicants that today's Bitcoin trading is not protected by adequate oversight. In particular, the SEC has noted that Bitcoin has no price established by a central exchange, making it difficult to establish reliable quotes for newly created securities. On the other hand, if BAKKT acquires gigantic volumes, it could eventually set a global benchmark price, as ICE does now for Brent crude. In that scenario, Bitcoin purchased by asset managers on ICE Futures US might pass the SEC's test for packaging Bitcoin into ETFs and mutual funds. So, depending on the success of the BAKKT exchange, will determine whether or not we start seeing a significant number of Bitcoin ETFs and Bitcoin mutual funds. So, as I said earlier on, I'm convinced that with the significant investment made by Microsoft, Starbucks, and the company that owns the New York Stock Exchange, the Intercontinental Exchange, ICE, I think those three companies are highly vested in making sure that this BAKKT exchange is a wild success. And I think that they have the relationships with investors, institutions, hedge funds, etc., and regulators, government regulators from, the New York Stock Exchange's relationships, that they can pull this off and be wildly successful. So I'm extremely bullish, extremely confident about the future of the BAKKT exchange and how it impacts cryptocurrency. BAKKT's partnership with Starbucks has led to speculations that its ultimate goal is to bring Bitcoin into the world of retail payments, something Loeffler and Sprecher confirm. The fat fees paid by merchants are just the kind of target they relish attacking. Today's consumers around the globe purchase a staggering $25 trillion a year in goods on their credit cards. The player who processes those payments, notably the card providers and bank intermediaries, reportedly charge retailers an average of 2.4% to 2.5% on those purchases. The card companies return part of the interchange fee to consumers in cash back or in airline miles, hotel points, or other rewards designed to build loyalty. If BAKKT succeeds in unleashing a surge of institutional trading in Bitcoin, the tokens could take on a new role as a highly liquid alternative currency. Folks with a BAKKT app on their cell phones could readily use Bitcoin for purchases from merchants. BAKKT would manage the conversion from Bitcoin to dollars, so the merchant would never see Bitcoin, only traditional currency. According to experts who've compared the transaction costs of paying via Bitcoin versus credit cards, the former would cut the current interchange fee by around 75%. Merchants could use those savings to lower prices or design their own rewards aimed at swelling the ranks of its 20-something fans. So that's kind of the conclusion to this article. That's my deeper dive into the BAKKT exchange. I do want to ask you, how can I be of service to you? Answer below with either comments or in the form below. And in the meantime, like, subscribe, and hodl. I want to thank you for listening to my video today, and I hope you have a fantastic day. Bye-bye.